Hello and welcome to Explain the Charts. Today, April 9th, 2025, we're breaking down the S&P 500, ticker SPY, and examining the impact of current events alongside technical chart analysis. First, let's discuss the current market climate. Recent news is dominated by President Trump's tariff announcements and China's swift retaliation. We're seeing significant market volatility as a result. Headlines from CNBC, Yahoo Finance, and the Wall Street Journal paint a picture of investors bracing for the impact of these tariffs. Some analysts are predicting a substantial market downturn, possibly even a bear market. We're also hearing from major CEOs expressing concerns about a potential recession. Now, let's dive into the SPY chart and see how these fears are reflected in the price action. Looking at the daily chart, we can see the recent volatility with some major swings in price. Let's focus on the last few months to get a clearer picture of the current trend. We can see a downtrend emerging. The S&P has been making lower highs and lower lows, indicating a bearish sentiment, which aligns with the tariff concerns and recession fears in the news. It's important to note that around March 31st, we had a big green candle following several down days, but we didn't hold that momentum and were followed by several days of extreme downwards movement. This supports the idea of overall downwards market pressure. If we can't hold the level of the previous resistance, we can expect to continue downwards to levels which we haven't seen in a long time. Now, let's switch to the 1-hour chart to zoom in on this week's price action. This will give us a closer look at the shorter-term trends and potential entry/exit points. On the 1-hour chart, the recent recovery on April 7th turned out to be short-lived, with SPY retracing most of that initial upside. This suggests a continued underlying bearish pressure, and perhaps more people are still expecting it to go down and are quick to pull out after any slight recovery. However, a potential support level seems to be forming around 490 to 492. If we break below that level, expect further downside. The next major support level could be found near the lows of March 2025. Now let's take a look at a 15-minute chart to see the very short-term movement of the S&P. With this level of detail, it is incredibly hard to be precise, but looking at the current candle in the chart, if it holds, then we may see an upwards movement over the coming hours. However, the market is still mostly bearish. We can see large periods of up and down movement, showing that investors are highly uncertain about the future and rapidly changing their minds. If that support level around 490 to 492 does break, a further sell-off is likely. To recap, important price levels to watch are the support around 490 to 492 and the resistance around 510 to 512. If the 490 to 492 support breaks, a swift move towards the March lows is highly likely, 75% chance, reinforcing the bearish sentiment fueled by the ongoing tariff war. Conversely, a sustained break above 510 to 512 could signal a short-term relief rally, but this scenario is less probable, 25% chance, given the current economic uncertainty. Keep an eye on news related to trade negotiations and any potential policy shifts from President Trump, as these will heavily influence market direction. The situation is rapidly evolving, so stay tuned to Explain the Charts for further updates and analysis.